Hello, I'm Rishad Salamat. This is Counting the Cost on Al Jazeera. We're looking at the global economic impact of the war in the Middle East. One nation that's hoping to gain from the Middle East conflict is Russia, the world's third biggest oil producer. Higher crude prices due to this disruption in the Strait of Hormuz have allowed Russia to earn more from its oil and gas exports. The US has temporarily eased sanctions on Russian oil, but the European Union has refused to do that, saying more revenue will embolden Russia's efforts to prolong its war in Ukraine. But the revised budget plans are at risk following repeated Ukrainian attacks on ports and oil refineries. Russia has banned petrol exports to protect against domestic fuel shortages. So can Russia help fill the global energy gap? Or is its capacity already under threat? Russia is seeing a turnaround in its economic prospects as oil and gas prices rise and its tankers benefit from US sanction waivers. While the European Union is holding on to sanctions, is there a new appetite in Europe for Russian oil and gas? The increased revenue is expected to help close budget holes, as well as bolster Russia's war plans against Ukraine. But Kyiv has accelerated its strikes on Russian oil infrastructure. Will Ukrainian attacks limit Moscow's ability to stabilize the global energy market? We have a panel of guests to discuss all this shortly, but first, here's Fintan Monaghan's report.
The war in the Middle East has raged for more than a month. Disruption to shipping through the Strait of Hormuz has cut off 20% of the world's oil and gas supply. Many countries are preparing for tough times, but for one, the chaos could provide an opportunity to come out ahead.
Now that the prices of our traditional exports are rising, but the markets are in turmoil, there may be a temptation to take advantage of the situation to generate short-term gains. I would like to emphasize it once again. We must exercise common sense.
Russia is one of the world's largest producers of oil, number 3 behind the United States and Saudi Arabia. It relies on oil and gas revenues to fund around a third of its national budget. Up until 2022, it provided around 10% of global supply. But the war in Ukraine upended Russia's economic model. Western powers imposed sanctions that closed off many key markets. Russia continued to sell oil to partners like China and India, but had to do so at a discount. The Iran war has changed that arithmetic. Fuel prices are surging as countries rush to outbid each other to access suddenly limited supply. The result has been a windfall for Russia. Years of war and sanctions had squeezed Russia's finances. Oil and gas revenues were down to $10 billion in the first 2 months of the year, a 47% drop compared to the same period in 2025. The Kremlin was reportedly planning a 10% cut to all non-security spending. But now, analysts predict Russia could gain an additional $45 billion in budget revenue this year. If the war drags on for more than 6 months, that could reach as high as $151 billion, enough to replenish state coffers and maintain war spending for years to come. The need to stabilize global energy markets has also benefited Russia. The US loosened sanctions on Russian oil that's already at sea, freeing up around 100 million barrels for sale. Europe shifted away from Russian energy, but the current crisis has created pressure to reverse that policy. So far, the EU is resisting that temptation.
We see that the Russian economy is not doing well. Even, the oil price hike is not helping them as much as they need. They have huge issues with recruitment of new soldiers to their army. So we have to see that this is the picture that we can't give up now. We actually have to increase the pressures.
Ukraine is also keen to undermine Russia's advantage. It stepped up attacks on oil export hubs. 40% of Russia's oil export capability is now compromised, according to the Reuters news agency. Kyiv strikes have damaged refineries, causing fuel shortages in some regions. Moscow has responded by imposing an export ban on petrol. Ukraine's allies have been seizing tankers belonging to the so-called Russian shadow fleet, carrying oil in violation of sanctions. Russia has downplayed the impact, but warned it could make the global energy crisis worse.
Ukraine's attacks are creating, amongst other things, some entirely temporary difficulties, but those could lead to greater price rises and even deeper crisis, including in the European Union and Britain.
Russia appears positioned to benefit from the crisis in the Gulf. And the longer the disruption continues, the more it stands to gain. Fintan Monaghan, Al Jazeera, for Counting the Cost.
Let's dive deeper into this. Joining us from Moscow is Russian energy expert Vyacheslav Mishchenko. In London, we have John Lough. He is head of policy at the think tank New Eurasian Strategy Centre and has previously worked with NATO and the Russian oil and gas industry. And in Berlin is Maria Pashtukova. She's an expert in energy geopolitics and diplomacy, as well as the program lead at E3G. It's an independent think tank focusing on energy policies globally. First of all, Vyacheslav, let's start off with you. What kind of state is the Russian oil industry actually in?
Yes, hello. Actually, so for a decade or so, Russian oil industry was a subject of coordination. I'm talking about the production of oil, of course, within the OPEC Plus platform. And now I think because of the situation in the Gulf, so this agreement and actually restrictions on production, they don't work anymore. So I think, so the production is there. So Russia possesses some additional volumes to produce. And there are two crudes, actually, two market crudes like Urals, which is normally should go to the west side, and actually ISPO, called after the pipeline East Siberia Pacific Ocean, which goes to the Pacific Ocean, actually. I think that's the direction Russia could increase, because the demand is in Asia Pacific and actually South and East Asia, and it amounts around 80 million tons a year. And in general, I think Russia could add and ship additional crude to this direction. On top of that, there are some cargoes which were a subject of sanctions already on the routes, and I think OFAC and generally American administration gave permission to key buyers like India to get this crude. It was about 50 million barrels, I think, which already sold. So in the first month, and the permission, if I'm not wrong, is 11th of April will be shut. So I'm not sure about whether they go and prolongate it, but if so Russia could deliver more Urals crude to India as well.
Maria, the same question for you. And of course, we're looking at all this in light of many attacks by Ukrainian drones on Russian oil facilities.
Yeah, sure. So what I would say is that the serious bottleneck right now is the availability of Russia's export infrastructure. Its exports fell already by about 400,000 barrels month to month in February. That was even before the latest Baltic escalation. And then the March attacks on Primorsk and Ust-Luga hit the export system much more directly. What we're looking at is approximately 40% of Russia's crude export capacity that has been affected, not of all of that taken out completely, but some parts of it. The Russia's Western export system has been impaired quite a bit. And given that there are export constraints on the eastern track, because most of the capacity towards the east is already at maximum or close to maximum, it is a big question whether Russia will be able to boost its exports at all, or will have actually to cut production both of crude and petroleum products, because particularly the Western ports were responsible for some exports of Russian petroleum products. In that respect, even if Russia were able to boost its production, and it has never been a big swing state, so boosting production on a short demand has never been Russia's forte. Even if it would have been possible, it's a big question whether it will be able to get it out. We do not know the extent of the damage done fully yet. We might be looking at several weeks. We might be looking at some parts of that capacity being out of operation for some months. I would say Russia cannot really meaningfully help offset the global energy disruptions, particularly on oil, in the short and mid-term, because what we're looking at is it is not all of the 20 million barrels a day that normally exit Hormuz that are locked right now. I think we're looking at about 9 to 10 million barrels a day of global oil shortage, because a significant part of that is still getting out via land and Red Sea, but also Iran keeps exporting almost at capacity to China. But still, it's about 10 million barrels a day. It's about 10% of global oil demand, and Russia can in no meaningful way replace these cargoes.
John, two quite opposite views there. What's your take?
Well, my take is that Russia is going to struggle to increase production significantly, both in short term and medium term. Short term, I think probably over the next year, it could do another probably additional 5%, something like that. It would then have to drill a lot more wells, and then you'd be looking maybe at another 5% in a year's time. So I tend to agree with the view that Russia's ability to fill the gap here is going to be somewhat limited. And indeed, we've got also the fact, as Maria was saying, that these export terminals have been damaged recently. It's difficult to know how long it's going to take to repair those, but there's certainly going to be some short-term impact. So I think relying on Russia to be, a sort of swing supplier in these conditions is really rather optimistic.
Vyacheslav, your take on this. I mean, the thing is that Russia produces the right kind of oil as well. And how much of that is their spare capacity?
I'm not sure about whether I can answer this question, but I would like to stress that since we're talking about the volumes, I think the strategy at the moment shouldn't be just about the volume. Because economically, I think like Russian producer, so we don't need to satisfy all the demands. So I think the key element of this is economic efficiency of the trade, because the crude, and especially Russian crude, is now because the spread, because of the physical markets and future market spread, so the physical volumes are being traded with a premium now. And I think Russia could gain and actually sell probably not too many destinations and not a big volume of crude, but with a high economic efficiency. I think getting more commercial value actually of this. So I think this is the strategy we should bear in our mind.
John, so let's just turn it this other way. Is Europe actually reconsidering the use of oil from Russia? And that would go really against the grain for many countries in Europe. I'm not including the likes here of, let's say, Hungary.
Well, the European Union is committed to phasing out its fossil fuel imports from Russia over the next, 18 months. Now, this crisis is certainly, I think, going to concentrate minds in some European capitals. I think probably major attraction might be to import additional Russian gas. I mean, Russia has still been exporting gas to Europe since the start of the war in Ukraine, but at much reduced volumes. Before the war started, it was up as high as 180 billion cubic meters per year. And last year, I think it was down to about 18. So there's been a sort of dramatic change here. That's pipeline gas, and still some significant volumes of liquefied natural gas, LNG. But I suspect that some European countries are really going to start to feel the pinch next winter if this crisis persists. So that question will certainly be opened up again. But then we come up against the question of how to manage this war in Ukraine, how that might be playing out, and whether the perception that contributing more significantly to Russian budget revenues just at a time when Ukraine is running short of money and European countries might be in fact struggling to support Ukraine in the same way is going to create, I think, a real headache for some European leaders.
Maria, how much politics is going to play into what's going on in Europe as they look at Russian oil and gas?
Well, I think John's right that European course overall will not be changing, or it doesn't seem to be changing even under this very real economic pressure. This is definitely not the same as reversing course. There are, of course, some rhetorics, particularly in the right-leaned populist parts of of the national party landscape, especially in Germany. AfD is, of course, as always, pushing for strong relations with Russia. But this is not mainstream within most governments. Hungary, of course, is an exception as always. But the shift away from Russian oil and gas is real strategically. It has been since 2022, and this has remained so. The Commission says that the remaining roughly 35 BCM of Russian gas should be out of the European markets in under 2 years, and the 2% of Russia's oil exports that are remaining by pipeline in 2025 should be phased out completely as well. It is not just the political rhetorics, and that is quite clear. We hear Dan Jorgensen, the energy head of the European Commission, saying that what needs to be in the focus is cushioning the shock to the consumers, but standing by its Russian gas phase out, the European Russian gas phase out target. But the reality is not just the political. The reality is also that in terms of the legal constraints and the market constraints, it's not that possible for the EU to go back to any considerable uptake of Russian oil and gas. There are regulations that both prevent major re-exports or reviving of exports via Nord Stream, because that pipeline has not been unbundled yet and is wholly owned by Gazprom. That has been the problem before it has been put out of commission. There are market constraints because during the restructuring after the Ukraine war, Europe has already diversified significantly towards Azerbaijan, Algeria, Norway, and the US, and part of its portfolio is blocked by those suppliers. So for Russia, there is not that much place to return to anymore. As John says, there is some maybe short-term uptick you might be seeing over the Turk Stream pipeline, because that one, the European branch of it, is currently underused, and there is some additional capacity that can be used by Russia if there were demand from the Eastern European countries, especially in the short term. LNG picture looks different. Russia is exporting at capacity from terminals that are not under heavy sanctions. Arctic LNG 2, that could bring potential significant capacity to the market, is still very restricted under sanctions. It's exporting just above 10% of its full capacity, and most of it to China. So there is no real sign or no show of that reality changing. In that sense, I would say European course is not changing so far. We'll see what happens in the next month or two. Of course, it all depends on how long the conflict and the closure of the Strait of Hormuz persists. But right now, it remains quite firm on phasing out Russian fossil fuels completely.
Vyacheslav, how much does Russia actually need this money, this revenue? And can higher oil prices really ultimately offset reduced export volumes?
I can answer this question on about the budget. I'm not sure about whether I possess the numbers, but I think so. Again, I think the strategy, the short-term strategy, is actually to sell on the higher prices and to get the most economic values from the operations of the export operations within this time frame. Actually, and so I think budget is getting now much better, because the previous month were quite upset because of the sanctions and because of the prices, which were quite low. Actually, previous, I'm talking about the 2025. But now I think it's getting better, and the revenues are coming. As I said, Russian crude physically available, is being traded with a premium to the benchmarks, and that's the good signal for the budget.
John, how critical is energy income for funding Ukraine's war plans? Or should I say Russia's war plans? Sorry.
Indeed. I'll look at it this way. Of course, oil revenues are a significant part of the Russian budget. And Vyacheslav is right that in the first quarter of this year, oil revenues were significantly down on where they'd been in the first quarter of 2025, from memory, around something like 50% down. And this was starting to create a budget crunch, and the Russian government was seriously discussing cutting large parts of the budget by 10%, leaving defense spending and social spending unaffected. So it was clear that this combination of sanctions and lower oil prices were starting to have some real effect and making it much more uncomfortable to continue fighting the war. But it has to be said that this war is not hugely expensive for Russia. When we talk about the country being on a war footing and having a war economy, I think we have to be careful, because it's not consuming a vast amount of GDP, whether it's, I don't know, 6 to 8% or something like that. But giving the countries at war, it is really not a massive investment as one would expect. However, of course, the increased oil revenues are going to reduce the pressure on the budget generally. That's going to make, I think, the Russian public feel that it's not critical to find an immediate end to this war, that the country can go on for a good long while, and certainly the political leadership will see it that way. But I think there's the additional benefit here of the fact that some European countries are going to struggle, I think, to make the case to their publics that they need to keep supporting Ukraine at current levels, and are possibly going to have to do more for Ukraine, given that obviously the US is no longer prepared to provide either economic assistance or military assistance to Ukraine. So that puts the burden on Europe to procure weaponry for Ukraine from the United States. And this is going to, I think, create more of an issue in some European countries. And Maria was rightly referring to the rise of the far right in certain European countries. And we can hear voices in France and Germany critical of this investment in Ukraine's defense. So I think there is another aspect here for the Russian leadership that we need to consider, that Europe is going to struggle, at least in the foreseeable future, to maintain this level of support for Ukraine.
Maria, could one of the things which results from this, that some of these gas fields in particular, and perhaps some oil ones, which were uneconomic, could become economic if this disruption lasts for a long time and oil and gas prices remain elevated?
Well, this is a good question. I would be cautious about that, because for some time, and I would defer to Vyacheslav, of course, for a more concrete picture, but there have not been major oil discoveries in Russia that can bring some considerable revenue if deployed today. I think when the Russian oil industry sees that Russia's oil fields are pretty mature, a lot of them, and also given the overall constrained investment climate and what we should not be forgetting, the global economy is heading into a macroeconomic crisis. The investment conditions are very likely to worsen for every kind of energy, not just including fossil fuels, of course, including oil and gas. In that sense, it is quite hard to predict if there will be any uptick in Russian additional oil production. Of course, there are other producers out there that might benefit from this demand for non-Gulf oil and gas. The US is probably the biggest winner, given that they can ramp up their shale fairly quickly and it responds to higher prices. And then there are some Atlantic or some producers across the Atlantic outside of the US, including Brazil, Guyana, and Canada, that might be able to pump a little bit more if they fast track the projects that have not been approved. They are in the approval process already, but there is really not that much spare capacity that can be boosted in the near or midterm, and the investment climate and the overall demand projection for global oil and gas demand is really not that rosy for some major, very capital-intensive investment decisions to be taken or on new exploration or new fields. In that sense, I think my answer would be rather no.
Okay, I mean, that to you now, Vyacheslav, here as well. Can some uneconomic fields become now profitable and sustainable? But of course, this is going to be contingent on how long prices do remain high.
Yes, but I would like to reverse a little bit the situation, because the market is first. I know that in the US and in Russia, nobody wants to invest massively just because of this situation. So I think we should look at the medium and long-term actually market movements. And I think this is short-term situation doesn't give any signal to the investors and to the upstream sector. But since the situation will be going that way, and of course it depends on how strong will be the damage on the Gulf production and the next period after the war, I think then the signal will come there, and I think we could expect some investment decisions, actually, not only in Russia, but in general in the upstream sector. And of course, it needs to agree with the buyers. So on the long-term relations, because since we're talking about the crisis and the situation now, it's just brief and quite momentum, and this is a spot market and in general. But since we're talking about long-term cooperation, I think the investments are there, but they should be based on the contracting and on the long-term contract agreements.
Absolutely, and if you look at the futures curve, you see prices much, much lower, actually, as well. But, John, I want to get your take on this as well. You know, if the war was to come to an end tomorrow, what would that mean for prices, and would they go down really quickly? Or given that, you know, Russia still has problems, it still has not reached its capacity and its refineries are being bombed by the Ukrainians, would high prices be elevated for quite a while from now on?
Well, my understanding is that if the war were to end tomorrow, it would take probably up to 10 months for markets to stabilize. In other words, for supplies to be rerouted and for, if you like, the sort of previous arrangements to recommence. So that is a long period. So during that time, we would probably expect to see prices relatively elevated, and that would be advantageous to Russia, because the problem is, and we have to consider the fact that if prices were to go excessively high, let's say, I don't know, $150, then we would probably see some fairly dramatic destruction of demand. And that then reduces the opportunity for producers such as Russia to benefit from increased prices. So there is some sort of balance here, I think, to be achieved if Russia and others want to gain from this current disruption. But the signals so far are that there is no easy way for the United States to exit this situation in Iran, that nobody has any sort of solution for how to deal with the Strait of Hormuz, other than perhaps persuading the Iranians that it will be a good idea to actually revert to previous arrangements. But who's going to do that? Is it going to be the Chinese? Because it really doesn't look feasible to open the strait by military means.
John Lowe, thank you so much. Vyacheslav Michenko and Maria Pashtukova, thank you so much for joining us. And that is our show. Get in touch with us on X at Richard TV, and do use the hashtag AJCTC when you do. Or drop us an email. countingthecost@aljazeera.net is our address. But there's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That is it for this edition of Counting the Cost. I'm Rashad Salamat from the whole team in Doha. Thank you for joining us. Al Jazeera's coverage of the war in the Middle East continues in just a moment.